Today, we look at Colombian election risk, Mexican cartel-linked enforcement pressure, and Brazil inflation and fiscal repricing. Welcome to Weekend Sentinel, the public weekly report on economic, social, and/or political risk impacting your portfolio from the producers of Latin American Risk Sentinel, or known by LARS. I'm Winn Trivette II, your Latin American regional specialist. My main product, Latin America Risk Sentinel, launches this Tuesday, a boutique Latin America-focused business intelligence service for high-caliber regional practitioners. My mission is simple: to provide decision intelligence for exposure to Latin America risk. Latin America Risk Sentinel sifts through regional news from multilingual open sources to clarify, cut through, and capture the essence of what you need to know every weekday so your clients prosper. You not only learn what happened, but more importantly, what it means. So, get started today with the Morning Latam Signal email at bit.ly/daily and the letter B. Your Saturday podcast, Weekend Signal, officially marks the soft launch of the Latin America Risk Sentinel, or LARS for short. LARS is a membership-based business intelligence product for Latam practitioners who need actionable information to protect theirs and their clients' interests from the kaleidoscope of risk vectors in the region. Monday through Friday, subscribers get the Latam Morning Brief, one signal that is need to know so that you stay in the know about the latest developments in the region. Subscribe today so you don't miss the first edition on Tuesday at bit.ly/daily and the letter B. You will learn more on the launch of the website LatinAmericaRiskSentinel.com on Tuesday as well. Today and every Saturday, you get 3 signals and their significance, so you're better prepared for Monday morning. This week, Weekend Signal is watching developments from 3 of Latin America's most consequential economies: Brazil, Mexico, and Colombia. Intrigued? Let's get started. Signal number 1, we start off with the Colombian election. Round 1 of the country's presidential election happens on Sunday, and it's not just a political event among 3 candidates representing different futures for the Andean country. It's a policy, security, and capital exposure watch. The first round may narrow the field, but it will not settle the risk exposure. While the apparent front-runner, Ivan Cepeda, hopes for a round 1 knockout of his opponents, an anticipated runoff could sharpen pressure around taxation, energy and mining policy, rural security, and counter-drug operations, as well as U.S.-Colombian alignment. Here is the LARS judgment. Colombia, Latin America's 4th largest economy, matters because the election could change how investors, counsel, operators, and advisors read the country's near-term risk profile. A left continuity path following Presidente Petra right now may raise concern about taxation, a worsening internal security situation, extractive sector confidence, and U.S. alignment. A center-right path may improve investor sentiment while increasing security policy pressure in rural areas. A hardline security path could produce a short-term optimism, but higher institutional and reputational risk while lessening internal security concerns. The watch point. Watch the runoff pairing. Who are the two that actually emerge? The coalition endorsements, the movement of the Colombian peso, bond reaction, candidate language on oil, mining, and taxation and counter drug policy. Signal number 2, Mexico trade and cartel risk. Mexico remains central to North American supply chains, but U.S.-Mexico relations are entering a more complicated phase. This is no longer just a story about nearshoring. Mexico sits inside two overlapping risk zones. Washington's efforts to limit China's influence in the hemisphere, including Beijing's manufacturing logistics chains, and also a harder enforcement posture against cartel-linked political and commercial networks. Mexico, the second major economy in the Latin American region, is trying to preserve its ties to both Washington and Beijing. However, U.S. enforcement risk is moving closer to corporate operating risk. Legal firm Freshfields notes that U.S. prosecutors indicted Sinaloa Governor Ruben Oroca Moya and 9 other current and former Mexican officials on drug and weapons charges, marking the first time a U.S. indictment has come down against a sitting Mexican governor. That action might expose companies operating in Mexico to greater scrutiny, criminal and civil liability under U.S. sanctions, and reputational harm. The LARS judgment. Mexico remains one of Latin America's most important business opportunities, but the risk profile is changing. Nearshoring still matters, but trade politics, China exposure, and cartel-linked enforcement and compliance risks now sit inside the same operating environment. The watch point. Watch U.S. tariff language, increased scrutiny of Chinese-linked supply chains, cartel-related enforcement actions, and corporate movement in automotive, electronics, logistics, and industrial manufacturing. And finally, signal number 3 from Brazil. Brazil inflation and fiscal risk repricing. Brazil's inflation and rate outlook is moving the wrong way. Higher rate expectations, persistent price pressure, oil shock concerns, and fiscal regime unease all point to tighter capital conditions for longer. The LARS judgment. Brazil's risk exposure is not a crisis. Inflation, oil price pressure, higher rates, fiscal credibility concerns can weigh on financing costs, currency expectations, and investor confidence. Brazil, Latin America's largest economy, remains investable, but the market may demand more discipline before rewarding the policy story. The watch point. Watch the SELEC expectations, inflation revisions, oil price pass-through, fiscal rule credibility, and market reaction to off-budget spending signals. Thank you for being with me today for this first edition of the Weekend Sentinel, a production of the Latin America Risk Sentinel podcast. Those are the week's 3 signals. Colombia shows how elections generate security and political risk. Mexico shows how opportunity can collide with trade, security, and compliance risk. Brazil shows how inflation and fiscal credibility can keep capital conditions tight. That is the LARS lens, separating signal from the noise. Weekend Sentinel gives you 3 signals to help you be better prepared for Monday morning. The full LARS briefing throughout the week gives members a deeper read, likelihood, impacts, scenarios, and watch points beyond the signal. Count on Latin America Risk Sentinel to cut through the noise so that you and or your clients can prosper and make sure their portfolios are protected in the Latin American region. Get started today with the Morning Latam Signal, which is going to start on Tuesday, by visiting bit.ly/daily and the letter B, and you'll also receive 7 trends impacting Latin America in 2026. Welcome to the Latin America Risk Sentinel. I'm Winn Trivette II, your Latin America regional specialist.